Good morning and welcome. You're watching Buy Now, Sell Now on ET Now. With me is Cheryl D'Souza and I'm Harsh Saita. We'll quickly take you through all the stocks that are alive and buzzing and of course how markets are doing. Cheryl, largely global cues supporting markets today. Dash of green across indices. We're seeing a good set of green and we're seeing all, even sectorally, all indices in the green. So large positive.
Absolutely, large positive. We are ending at least the last day of the trading year. Hopefully, we will end in the positive territory, isn't it, Harsh? Like you mentioned, all the sectoral indices are in the positive territory. Benchmark indices holding on to a good set of gains. 17,200 is on the Nifty. Talking about the top gainer on the Nifty, it is Reliance Industries. Look at the way how Reliance Industries is performing in today's trading session. 3%, over 3% up move coming in on Reliance Industries, lending huge support to the benchmark indices as we speak. ICICI Bank, Nestle, HCL Tech, NTPC are the other set of gainers on the Nifty. Talking about set of losers, yes, we do have some of the counters that are losing in trade today. So you have Sun Pharma, Apollo Hospital, Bajaj Finance, as well as ITC and Titan that are under pressure. So it is actually the consumption pack that is actually playing a spoil sport in today's trading session, along with some of the pharma and hospital names as well. But the advance decline ratio, the market breadth seems to be very much in the favor of the advances. So hopefully we are able to sustain that right up till the close of markets. But talking about the sectoral indices, like Harsh also mentioned, all the sectoral indices are in the positive territory, with energy index being the top gainer, 1.8%. Now you also have Nifty Bank that is outperforming the benchmark indices, 1.3% after coming in for banks. IT index also holding on to get good gains. But let's take a look at what the broader markets are doing, and especially Nifty Small Cap Index as we speak, 1.6% uptick coming in for the broader market. So it's a healthy trading session, good gains coming in for the markets. Hopefully we should be ending the last day of the financial year on a positive note. So that's what the markets are indicating for today. But remember that today is a Friday, which means it's a learning day for all of us here at ET Now, as well as for all of you at home or watching the show. And today on BNS and Pathshala, let me only ask Kunal, what is he going to teach us today?
Thank you, Cheryl, for that. Even though you won the wrong color with respect to the markets, but today I've chosen the right topic, which is a double bottom formation, and it's an indication where the markets form stocks or markets or a different asset class. They form major bottom for themselves and they go into a strong bit of rally. So we'll first look at how the double bottom pattern actually looks about. So it's basically the trend of the stock. When the stock is going into a downward trend, this is a zone where the stock initially forms a zone of support or demand. The stock goes into a first period of a bounce, retests the second or the previous lows for itself, and the demand originates comes back again. So this period, the gap from the lows to the bounce, that reduces dramatically for the stock prices, and the stock established what we call as a double bottom, which means a double retest of a demand zone. And on both the attempts, the stock manages to climb back strongly. And after this is where we expect the stock to not just bottom out, but to start going into a trending mode. So from a downtrend, the double bottom formation gets into a reversal phase and it goes into an upward trending mode. Now we look at few examples, two stocks, one from the mid cap space and one from the large cap stocks. This is the charts for Bank of India. This is a very recent chart for Bank of India. The stock forming a double bottom pattern over here. So as you can see, the stock was going into a downward trend. Tested the levels first around this 40-45 mark, bounced back, came back towards the retest of the previous swing lows, managed to hold on to that previous supports, and then you saw the stock going into a trending upside. This is the very recent charts for Bank of India, current charts for Bank of India. After a sharp correction, the stock went into a bounce, retest the second previous swing lows. That's what we call it as a double bottom, and now it's on the verge of a breakout back again. So on the confirmation of a breakout, we could expect the stock to start getting into a trending mode on the upside. And the last example is ICICI Bank. Again, a stock which historically has shown very classical signs of double bottom formation. Now, as you can see, the stock, in 2022, first half is where the stock formed a double bottom over here, 650, 660 zones. In fact, it came thrice towards retesting the previous lows, but the demand for the stock price managed to rise up quite strongly, and you saw the stock trending up significantly higher, breaking the all-time high levels above the 850 mark. So that's the importance of double bottom formation. It indicates that stocks establish a strong support zone, and from there we see not just a bounce but a start of a fresh trend for the stocks as well as indices.
All right, so you've given the examples of stocks to put this particular technique into into context for all of us, Kunal. But would this apply the same even for the benchmark indices? And do you see that Nifty has formed a double bottom of late? Or can we derive that from here on we'll only bounce back?
No, so we formed a double bottom pattern, but it's on these short-term timescale charts. But yes, this is a phenomena, this is a study, this is an indicator which actually gets replicated to various asset classes. So we are not just discussing stocks, we are discussing indices, we are discussing different asset classes, gold, silver, dollar index, global equities, global indices, all of them, they tend to form a very similar kind of a chart formation. So double bottom pattern, and hopefully in the next week when we discuss double top formations as well, those are classical signs which gets applicable to different kind of asset classes.
All right, so that's the BNSN Pathshala for the day, Harsh, and he's also given the topic for my producer Abhishek. So Abhishek, you know next Friday what to ask from Kunal, isn't it? Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. You can write to us on our WhatsApp number that will be flashing on the top of your screen very shortly, or you can connect to us on Twitter as well as Facebook. We are live on those platforms. Do mention your name every time you write to us. Also mention the stock that you're looking to invest in. If you've already invested, mention the buy price as well as the quantity that you're holding of the stock, and also your time horizon. That will help our experts help you better. But before we get going with your stock related queries, let me bring on board our experts for today. We have Kunal Bothra as well as Avinash Gorakshakar joining us on the show. Very good morning to you, Kunal, as well as Avinash. Thank you so much for joining us on ET Now. And Avinash, we have come to the end of FY23. We will be kickstarting a brand new financial year come next week or come tomorrow. But what should investors keep in mind in order to make sure that their wealth is protected in the new financial year as well?
Yeah, good morning, Cheryl. See, I think today is a good market day, so I would believe that investors who have actually consistently done their SIPs regularly in a disciplined way have accumulated quality businesses obviously have benefited. But I think in the longer run, even investors who have not participated till now, I would suggest I think it's a good way to accumulate stocks in a small SIP approach. And I think that would definitely play longer term rewards, because despite the volatility, SIP provides you a good entry point on a regular basis. The only thing which is important from the investors is they should have enough patience and conviction. And equity is a long-term asset class, so I think rewards would definitely come in. But I think don't get scared of the volatility. But I think invest in a disciplined manner, and I think invest consistently. This is the mantra which I think they should follow, so that they can reap rich rewards from the equity market.
All right, so that's the take coming in. What should you do in order to protect your wealth coming new financial year? But with that, let me kickstart with taking all of your stock-related queries. And the first one that I have is coming in from Sandeep, and he's asking about Welspun India. He has already 100 shares at a price of 80 rupees per share. He wants to know how is this particular counter for a long-term investment idea. What's your take on this one, Avinash? Sandeep has already invested and looking for a longer term perspective. Do you think that Welspun India makes the cut for a long term play?
See, I think clearly last couple of quarters, Welspun India has not delivered numbers very strongly, largely because of the rise in cotton and cotton yarn prices. But I think now cotton prices have started correcting. And I think possibly in FY24, numbers should be much better than last year. I believe that, if the investor has a slightly medium-term horizon of, say, 12, 18 months, then I think he should hold on. My sense is it's a large player in the international market, has a very well-diversified kind of product range. They have also an array of retail stores where they sell their products. So I would believe that it's a good long-term story, but in the near term, there could be some challenges. And obviously, in FY24, one could see definitely a good improvement. So I think continue to hold on, but don't expect a short-term upside. In the medium to long term, I think definitely this could make a lot of money for the investor.
Right, thanks so much for that. Let me quickly shift it to Kunal. Kunal, tell us, we have Manish from Vadodara who has 80 shares of JSW Energy at 228 rupees a share. Needs advice on how we should go about on this one.
So I think the longer term charts for JSW Energy are very attractive. I think recently the stock has corrected and come back towards 243 levels. The earlier high for the stock was 400. So it seems to be a stock which is getting into a recovery phase. I would believe that the previous low low. I think the low in the month of February was around 200 marks. So you can keep that as a broader stop loss or a support range for JSW Energy. In case if the stock doesn't fall below that level, then I believe a strong case that the stock may get into a upward trend. So would suggest a hold on JSW Energy. In case if the stock corrects closer to the 200 mark, keep that as a zone where you may look to average. On the upside, I would look out for maybe 280, 285 as an immediate target for the stock.
Okay, this one is coming in from Jay Padmani. She's writing to us from Rajkot, Gujarat. I'm sorry, he's writing to us from Rajkot. He has Sri Renuka Sugars, about 2,500 shares at a price of 56.5 rupees per share. He wants to know what should he do now with this particular stock. What's your take on this one? Avinash, no doubt the stock right now is below his buy price, but we are seeing a lot of sugar stock pick up steam once again.
Yeah, I think you're right, Cheryl. Sugar prices have started firming up. Globally, sugar prices have gone up, and the government has also fixed a higher export quota for the domestic sugar players. And more importantly, sugar companies like Renuka also are into ethanol. So ethanol is also going to make a decent amount of money for the company going forward. But the only negative caveat for this stock is that the company is fairly highly leveraged. So obviously there could be a problem here. So, if the investor has a slightly medium-term horizon of at least 8 to 12 months, he can hold on. I would be looking at better numbers in FY24, and obviously, he should be able to get a recent risk reward from his buy price.
Right, Avinash, I'll stay with you. We have Kamal from Spain who holds IDFC First Bank at 58 rupees. He's a long-term investor. What's your sense on this one? Should he hold?
Yeah, I think IDFC First is one of those banks which has steadily improved its CASA ratio above 50%. They enjoy very good net interest margins also, and I think the asset quality has also now become reasonably good. More importantly, the third quarter numbers were very solid. Management commentary was also quite positive, and most importantly, I think looking at the kind of headroom for growth in both the SME, MSME sector and the durable sector, where they give loans of 2 to 3 years. I think the road ahead is going to be pretty strong for IDFC First Bank. So I think continue to hold on. This is a bank which could possibly give a lot of money if the investor can hold on for the next, say, couple of years.
Okay, coming to you, Kunal. Hitesh is writing to us and he's written, since Kunal is back, please ask him entry levels for HDFC Bank as well as Kotak Mahindra Bank. He wants to stay invested in these counters for the longer term, but what's the entry price?
So I think 1700 and below could be a good entry zone for Kotak Mahindra Bank. In fact, I think if I'm not wrong, last couple of weeks back, the stock tried to break below that level, but that's where I think a lot of demand has come back again for Kotak Bank. So you can keep that as a level to buy. Again, 2% higher is not a big bargain for the stock price. So you can start looking at current levels. In case if the stock falls below that 1700 mark, you can look to average. But ideally, you should not miss out large cap names just because they are 2% or less than 2% higher from the previous swing lows. Same would be the case with HDFC Bank. I think at 1550, 1565 is a good zone of support for HDFC Bank. The only catch is that these stocks, whether these stocks would come back into that leadership stance, how soon can these stocks come back into a leadership stance? That's something I think we'll need to watch out for. But both these stocks are coming back at a very attractive zone. So from a long-term play, I think these are good zones where you should look to start accumulating.
Right, Kunal, I'll stick with you. Talk to us about NMDC. We have Deepak from Mysore who's asking for what levels he should look out for from NMDC and where should he buy?
So, the stock had I would say a very classic kind of a rally from 75 levels to 130. Then there was a lot of, I think, special situations for NMDC from 130. The stock has corrected towards 105, 110 levels. Currently at 111 mark, I think it's a good zone to buy the stock even at current levels. If I'm not wrong, it's very closer to a completion of a Fibonacci retracement as well from the 130 levels. So I think somewhere generally in between 75 to 130 is the stock price has rallied towards. We say that closer to 100, 105 is where there's a strong psychological as well as a mean retracement support for NMDC. So if you're looking at a buying zone or a zone where you can look to accumulate or add, I think 100 to 105, which is just very close to the current market price, should be a zone where you should look to add.
Okay, Avinash, this one is coming in from Akshay. He's writing to us from Dubai. He has 200 shares of Vinati Organics at a price of 1900 rupees per share. His time horizon to hold this particular counter is about over 5 years. He wants to know whether it makes sense now to average this counter, given the fact that it is now at around 1780 odd rupees.
Yeah, I think looking at the long-term growth trajectory of the company, they are into specialty chemicals, and most importantly, margins still continue to be pretty attractive. My sense is, if the investor has a 2-year plus view, he can definitely average this stock, because I believe a lot of wealth already has got created by the company. And going forward, also looking at their expansion and looking at their margin profile, I would not be surprised that the next 2 years also should be equally strong. So he could average, but keeping a time frame of 2 years is a must, because the earning story will obviously play out in FY24 and 25. So near term, possibility of any re-rating looks little difficult, but longer term prospects continue to be good.
Right, Avinash, and what about Devyani International, right? We have a viewer here, Suraj from Kochi, who has around 2,000 shares of Devyani International, holds it at 171 bucks a piece. What's your sense? He has a 1-year tenure in his mind.
Yeah, I think QSR companies are doing pretty well. In fact, post-COVID now, even the dine-out facilities are being fully occupied by customers for these players. Most importantly, I think QSR market in India is going to grow by 25 to 30%, and clearly there's a huge demand-supply gap which will help all these players. Now, coming to the investor's query that he has purchased at 170 and he has a time horizon of 1 year, I think that seems a little short, because most of these companies trade at expensive valuations, about 25 to 30 times. And even in Devyani International, unless you have a 2-year plus view, it's very difficult to believe to make some sort of decent money in this counter. The company is growing very well. In fact, they have said that in the next 3 years they would be adding about 350 more outlets, and it's a Varun Beverage company, so the management is well aware of how this business runs and has made a lot of wealth for investors earlier. So I would say, give it a slightly longer time horizon, and then only you could make a decent money in this counter. In the next 1 year, I don't think you're going to see a very large re-rating in this counter. So he should continue to hold on.
Okay, this one is coming from Bhargav from Kuwait, and however, he has asked me to ask this question to you, Kunal, but I believe it's more on the fundamental side. So I'll ask Avinash this one. It's on Gujarat Pipavav. He's already holding 500 shares at a price of 65 rupees per share, and he's been holding on to this counter for over 5 years now. Avinash, he wants to know, due to the trouble in a competitor name, do you think that will bode well for Gujarat Pipavav? If not, also, how's the prospect for this counter looking like? Because given the fact Bhargav is already holding it for over 5 years, should he continue to stay put with this one?
This is a business which actually is a infrastructure kind of story. And looking at the next 2 to 3 years, the kind of growth which is going to come in India on the infrastructure side, I would not be surprised that a lot of growth could come in further also. So continue to hold. I would definitely appreciate that 5 years is a very long waiting period, but definitely patience would be rewarded if he continues to hold, as the risk reward continues to be good.
Right, and let me switch over. Kunal, we have Pradeep from Bangalore who holds IEX. What can he expect going forward? Sorry for that. And what are your short-term targets on IEX?
So I think 125, I've flagged up this many times, is a good zone where I think you should look to add or average IEX. In case if you're a long-term investor, then the stock has finally managed to tap back into a very strong demand zone. I think last time around, if I'm not wrong, just I think 4-5 months back, the stock had formed a bottom which was around this 128, 129 mark, which means very close to that strong levels of 125, and from there it bounced off to 150, 155 kind of a mark. So I would expect something very similar, even stronger, for IEX going forward. So if you're looking at a good value zone, and if you're a long-term investor and looking at adding these kind of high beta stocks, then I think 125, maybe at 130 levels, this range of 5-6 rupees is where you should look to add or accumulate.
Okay, this one is for you, Avinash, and this one is coming from Subrata Mukherjee, writing to us from Kolkata, and he wants to know about Laurus Labs. He's looking to buy this one for the longer term. Do you think that Laurus Lab is now an attractive bet to look at, given the fact that this one has actually seen a lot of correction, a lot of volatility on back of numbers as well? Even in the last 1 month, 5% up, downtick coming in for this one. So Laurus Lab for the long haul, is it good?
Cheryl, I think the pharma sector is seeing a lot of bottoming out, and I think Laurus Labs has actually, almost halved in the last, 12 to 15 months. Considering the fact that now the company is in the midst of a large capex, because here the promoter is technically very qualified, knows the industry very well. Our sense is that possibly for the next 1 or 2 quarters you could see the impact of capex, but once the operating leverage from this business starts picking out, you would definitely see a significant amount of top line and profits coming from these assets which are going to be put to use optimally. So I would say that if you are looking at the next 12 to 18 months, one could definitely nimble at the current level. The stock has corrected significantly, and I think most of the negatives are there in the price. So I would believe a small quantity can be taken, and obviously keep a time horizon of at least 12, 18 months.
Right. Kunal, please talk to us. Mr. Guru has, really looked at EID Parry and he believes it's made a double bottom. So confirm that for him. That's point number one. And please provide him guidance with whether he should buy.
Well, not a classical double bottom for EID Parry. I think the previous lows, so when I look at it on a slightly medium term time scale, then I think the previous lows for EID Parry, which was in the month of, I think, March, April 2022, was around the 390 odd mark. Currently, the stock is at 480 levels, which means it's the major low for the stock is substantially lower. Even if you look at the very recent charts for EID Parry, it said that the stock formed a low which was around 430 levels and then bounced off to 483. So there has to be a retest of at least the 430 mark for us to call it as a double bottom formation. Ideally, in these kind of stocks which have been falling very sharply, you have to wait for that double test to happen. So I would suggest to wait out for a confirmation when the stock, say, falls back to 430, 450 kind of a range. That's where you can preempt a double bottom as well as go for a buy.
Right. Thank you for that. Stay tuned, of course. Welcome back. You're watching Buy Now, Sell Now on ET Now. We'll go ahead and I will quickly ask my next question to Kunal. Kunal, Suresh from Chalakudi, Kerala is holding 148 rupees or rather Anantaraj at 148 rupees. Could you advise him whether he should hold, sell? What's your take?
So I think you should look to average the stock at current levels. My belief is that the stock is restarting a very strong uptrend for itself. In fact, it was also one of the Diwali picks which I had mentioned when the stock was at sub 100 levels. Even at current zone of 117, 120 odd mark, it seems to be a stock which is outperforming most of the other peers. So relatively as well as individually on the charts, I think it's a very strong candidate of a breakout. Would suggest a hold. If you bought at higher levels, good time to average.
Okay, could I have one more coming your way, or rather two more coming your way? This one is from Rakesh Bhatnagar. He's writing to us from Ghaziabad. He has First Source Limited 1800 shares at a price of 87 rupees per share. Tata Power 700 shares at a price of 182 rupees per share. He wants to know what sort of strategy should he adopt for these counters for a period of 2 years. Does it make sense for holding on to this one, or also look to average right now?
Well, so First Source Solutions, I think yes. My sense is that these mid-cap IT names are ending their phase of correction now. There could be a correction of maybe another 5-10% odd, but from long-term play, these stocks have already gone through a sharp correction of more than 15 months. I think from 2021 end, December end, is where these stocks actually topped out, started to get into a correction. So that time-wise, price-wise correction seems to be almost nearing an end for these mid-cap IT names. So it's a good zone where you may look to average. For Tata Power, I would maybe wait out for maybe another month or so, because the recent sell-off which the stock had seen from 230 to 25 mark to 180 levels, it seems to be that the last 2 days of price action is more of a relief bounce back, and the stock may get into a retest of the previous low. So a better level to buy Tata Power would be if the stock retests its previous lows of 180 approximately. That could be a zone where you may look to average.
Right, I'll quickly move on. We have Bipas from Kolkata, Avinash, and I'll come to you on this one. He has Amber Enterprises at 3,000 rupees a share. What's your suggestion? Of course, the stock's tanked quite a bit after that.
See, I think Amber Enterprises is a large play on the domestic air conditioning sector because they operate in the ODM segment. And I think business is growing very rapidly. In fact, looking at the kind of heat wave currently seen in the country, I believe the domestic air conditioning market is going to do very well. However, the stock has been purchased at a very high level, and I think unless the investor has the next 2 years in mind, I don't think you're going to see a significant re-rating or recovery in his cost price. So I would believe that if he has a 2-year view, he could even average at the current odd levels, because I think the business is going to grow rapidly. And in the ODM space, I believe, Amber has a dominant market share, almost 60-65% of the market is controlled by Amber. So I think keep a little patience and a little more time frame in mind. In the short term, the stock may not move up, but the coming year, that is FY24, should be significantly better as compared to last year.
All right. This one is coming from Bharat, and this one is for you, Avinash. He wants to know about Polyplex as well as Hykel. He has investments in both of these counters, and he's saying the current loss is at around 20 to 25%. What should his strategy be in these counters? Good ones to stay put with, irrespective of him facing a loss right now?
See, I think both the companies, Cheryl, you mentioned Polyplex and Hykel, they have been facing significant, industry headwinds. As far as Hykel is concerned, they operate in the contract research pharma space as well as in the agro space, and the agrochemical, segment has underperformed in the last couple of quarters. I believe, to get a recovery in the company, the agrochemical business is going to depend on how this year's monsoons pans out, and obviously how FY24 turns out to be. So I would believe that he should hold on here. It's a good company and has a good business model, but I would believe that it would take at least 6 to 12 months before you can see a kind of a significant recovery in the earnings as well as the stock price. As far as Polyplex is concerned, I think the wait could be longer because polyester prices have come down significantly, both domestically and globally. And I think at least for the next 1 or 2 quarters, Polyplex may not show significant upside in their margin. So I think Polyplex, I would believe that if he wants, he could shift over to some other stock, some stock from the capital goods space or from the private banking space, because here I think the pain could be longer. So I think he could look at stocks like IDFC First or maybe a Federal Bank, typically action construction equipment from the capital goods space, which are better bets as compared to Polyplex.
Right. Let me move on to Kunal. Kunal, could you talk to us? Mr. Nishit holds Asian Paints, average price 2950 a share. Would you, and he's a longer term investor, but he wants to understand levels from you. So what he really wants to understand is, should he accumulate more or expect more downside in the near to medium term?
See, it's a tough one because price-wise, the stock may have come back to a very attractive kind of a territory. I think 2760 is also the previous lows in the month of April, May 2022, where the stock bottomed out and then from there rallied to 3500 levels. So price-wise, it may have come back into a very attractive zone. The only concern with the stock price is the correlation which has been broken with respect to crude oil prices. So at a point when crude oil prices had actually risen up higher, the stock went into a corrective phase. When crude oil prices went to a correction, the stock also went into a correction rather than getting into a bounce. So that's the only concern with a stock like Asian Paints. So I think purely on price terms, you can look to buy or as well as accumulate on the stock price, but more confidence could be generated only once the correlation comes back again with respect to falling crude oil prices.
Okay, this one is coming from Rajendran K. He's writing to us from Bangalore. Kunal, one more coming your way. He wants to know whether he can buy Adani Ports, Ambuja Cements, as well as Adani Enterprises at a current market price, and which among them do you think stands out?
So I think out of all three of the names, Adani Ports, of course, is the most stable chart, very, I would say, relatively less volatile as compared to the other two names. Ambuja Cements, again, low beta stock, but then the stock has fallen, rather has risen quite mildly as compared to the other peers. So, it's a stock which has surprisingly gone into a very shallow or a narrow kind of a trading range. So, I would avoid Ambuja Cements. Adani Ports is something which I would recommend if you're looking to buy, something from this kind of a volatile or news-based space, then I think Adani Enterprise could be a better bet.
Right, and Kunal, I'll stick with you. So we have Jayakrishnan from Kerala, who also owns Ambuja Cements already at 392 a piece. So would you then suggest him exit or him to hold on to his investment?
So he can hold on, but I would not suggest an averaging out or an add at current levels because of the low beta nature, the intensity of the stock not to rise very sharply on the upside. It may take a lot of time for the stock to come back towards maybe 380, 390 levels, assuming if there is no kind of a major news flow on the negative side. So I think in that regards, you may just hold on to your existing quantity, but not to average.
Okay, this one is coming to you, Avinash. This one is coming from Rajan. He's writing to us from Delhi. He's saying he wants to invest 50,000 rupees and in two stocks that he's shortlisted. One is CMS Info and one is VATech Vabag. Which one should he look to invest that 50,000 in? Do you think CMS Info makes the cut or VATech Vabag? No doubt he's not mentioned his stock, his time horizon. The fact that he used the word invest, I would like to think it is long term.
Yeah, I think Cheryl, I think Vatek Wabag looks a better bet because considering the fact that it comes from the water purification market, and I think the government has opened up huge projects which could give a big opportunity for Vatek. And interestingly, there are many large HNI investors like Rakesh Jhunwala who have invested in the company. So I think after a long period of sluggishness, now the company seems to be well poised for growth. So I think if he has maybe the next 12 to 18 months in mind, Vatek Baba could be a much better bet, although CMS Info is also good. But I believe that the bigger opportunity is in Vatek Baba, where you could get a decent risk reward.
Right. Also, talk to us, Avinash, about Kaveri Seeds. What do you suggest on this particular counter?
Can you please repeat the name?
Kaveri Seeds.
See, I think Kaveri Seeds is basically into the seed market, and I think for them, as I said earlier, the agrochemical market is going through a little turmoil. The third and the second quarter for FY23 was not at all good, and I don't think even the fourth quarter would be anything different. So here, I would believe that unless the investor has already made his position, fresh position should be avoided because I believe that once the monsoon is over, then only we could get some sense that how agrochemical companies and seed companies do. In case the monsoon does not turn out to be good as last year because of reports of El Nino factor coming in, then I think we could expect a further downside. So I think those who have can hold on, but fresh buying is not advisable.
All right, this one is coming in from Swati, and this one is for all the viewers out there. On behalf of all the viewers out there, Kunal, who've missed the bus in investing in these defense counters, and for Swati, it is BEL and Bharat Dynamics. She's saying she's missed the bus for buying both of them. Is it worthwhile to buy them today, or now wait for some correction of approximately 5% or so? Do you see that these stocks, any correction is on the horizon for them?
Well, BEL and HL are the two names which I think we've been advising consistently over the last many months. In fact, BEL just recently went into a correction. I remember, I think last week also we had a query when the stock was at 1991, and I had advised to add, average, or accumulate the stock at those levels. I would believe so that you should look to add or average only closer to that 1991 mark for BEL. But it's a good stock where you should look to hold on. HL also is the other name which I think you should look to add. So if you're looking at the top candidates from the defense space, HL and BEL is what I would recommend. But BEL specifically closer to 1991 should be a better zone to buy.
Right. Avinash, let me switch over to you. Couple of questions coming through. We have one, ACE and Voltam, both. At current levels, is it okay for purchasing from a 3 to 5 year tenure? What's your sense?
Yeah, I think I recently suggested Action Construction, which is known as ACE in the market. So I think, see, Action Construction can even be accumulated at the current level, considering that their order book is very strong. They hold a very large market share of almost 60 to 65% in the mobile crane market. They're also supplying to the defense market. They have a decent exposure in the material handling equipment market. So I think all said and done, one could expect a very decent risk reward over the next, say, 12 to 15 months. And secondly, Voltam is also a great business. It's a debt-free business, has a large order book, largely caters to the power kind of ancillary kind of players. So here also, I think if the investor does not mind the illiquidity factor, because Voltam is a stock where I believe the fundamentals are strong, but the liquidity is little thin. So keeping a longer time frame, I think both these stocks can be accumulated, but keep a time frame of at least 12 to 15 months.
Quickly, let me take this one. This one is coming from Murthy. He's writing to us from Bahrain. And Kunal, best price to exit sale. He's already making a huge 35% loss on his investment.
I think you should not be in a hurry to exit. I think I would recommend to hold on.
Right. With that, we'll slip into a very short break. More on the other side, of course. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me continue taking your stock-related queries. This one's come from Vivek, and this one is particularly for you, Avinash. Garware High-Tech Films is a counter that he's asking his query on. He already has purchased the stock at around 545. He wants to know what should he do, average or hold on to it for the next 2 years.
I think Garware High Tech is a very high value added polyester packaging company. In fact, they are into sun control films where they have a monopolistic hold. They not only supply to the domestic market but have a large export market also. And interestingly, now for the automotive sector, they have launched a new polyester film which actually helps the car, the vehicle from any scratch or dents. And I think this product is now being slowly being sold on a pan India basis. So I think revenues from this new product would definitely help the company grow significantly. Interestingly, HNI investors like Ashish Kacholia also holds a significant stake here. So my sense is the business is good, the balance sheet is strong, the company has very little debt on the books. There has been a slight problem in the last quarter because margins have come under pressure because of rising crude prices. But hopefully, if crude prices cool off, then I think the company should do better. So I think keep a time frame of at least 12 to 18 months. I think at these levels, the stock seems to have discounted all the negatives, and I think you could get a decent risk reward provided you hold for the next 12 to 18 months.
Right, Kunal, we have a viewer who's wanting to know your view on M&M. He's bought 71 shares at 1180 a piece. What's your sense with regard to the range is what he wants to understand.
So, the last 1 month, 2 months of price correction for M&M has dented the range for the stock. Earlier, the range for the stock was around 1200, 1210 as a support and closer to 1350, 1380 as a resistance. But because of the recent correction of the stock price, where it's broken below the 1200 mark, I think came very close towards the breaking of the 1100 levels, the range has shifted down by 100 rupees. So I think 1100 seems to be a good support for the stock price. The only concern is that the stock is not participating in terms of the bounce on the index in the last couple of days, like what we typically see for a stock like M&M, which means that the selling pressure may not be over for the stock price, at least over the last couple of days. So would wait out for, I would suggest to wait out for buying the stock. If you're looking to average, wait out for a fall below the 1100 mark. That could be a zone where you can look to go for a contra buy.
All right, and with that, let's kickstart with the rapid fire then. And the first question coming your way, Kunal. This one is from Captain Ramarao from Pune. 80 shares of Praj. He's holding for the long term at around 53.2 rupees per share. He wants to know whether he should continue to hold on to it or book profits. He's earning good dividend as well.
Absolutely, you should hold on to the stock.
Right, let me quickly take it to Avinash. Avinash, we have Suresh from Hyderabad. 500 shares of GMR Infra is what he owns at 41 bucks a piece. He's a long-term investor. Should he average or sell at this point of time? He has a 1-year timeline for this one.
No, I think he should hold on. My sense is possibly average at low level, but continue to hold.
Okay, this one is from Hemant. 200 shares of Delta Corp at 208 rupees per share for the next 4 to 5 years. What's your view on this one, Avinash?
I think he should hold on. See, this is the only casino company which is listed in India, and I think with hospitality doing very well, they should do better. So continue to hold.
Right, Kunal, we have Hemachandra, who's holding Adani Enterprises at 1630 rupees a piece. What should he do? What's your view?
Look to hold on.
Okay, Kunal, Shri from Kerala would like to buy Titan for a period of 3 to 6 months. Is it the right time to buy or some other buying level?
Maybe a slightly lower level, 2450 could be a better level to buy for that time frame.
Right, Avinash, we have Arvind Reddy from Hyderabad who holds Bank of Maharashtra at 30 rupees a share. What's your sense on the fundamentals? Where can he average?
No, I think Bank of Maharashtra is doing very well. In fact, they have bounced back significantly. So I think at lower levels of say 27, 28, you could think of averaging and continue to hold.
Okay, Kunal, quickly, this one's from RK. He has 100 shares of CE Infosystem at 1,105 rupees per share. Is it worth holding on to this one or look to switch to Sasken Soft or HCL Tech instead?
I think you should look to shift to HCL Tech as well as Tech Mahindra.
Right, and Kunal, what about GSFC? We have a viewer who holds it at 172 rupees a share. What's your sense on this one?
I think you should look to hold on as of now.
Okay, Shrikant from Hyderabad has HDFC Life 100 shares at a price of 514 rupees per share. What should he do? Continue to stay put with this one or exit? What's your take, Avinash?
I think he should hold on, try to average at lower levels and take a long-term view.
Right, and Avinash, what about NBCC? We have a viewer who holds 15,000 shares at 52. He's held it for a year. What's your sense now? What should he do?
No, I think he should hold on. I think keep a time frame of at least 12, 18 months.
All right, and with that, we come to the end of the rapid fire as well as queries. Thank you so much, Kunal, as well as Avinash for joining us on the show, taking our viewers through all the stock-related queries. And Kunal, thank you so much for a brand new topic on BNS and Pathshala. And with that, it's a wrap on this week's edition of Buy Now, Sell Now. It's a good buy from the entire team of Buy Now, Sell Now. There's Harsh, Shrishti, my producer Abhishek, my director Santosh, as well as the entire camera team. Thank you so much for watching us this week. We'll be back next week.